What's up guys, welcome back to another video. Today is another video of how I made money in the markets. This trade was taken yesterday. I believe I made around $635 trading the S&P 500. And I'm very glad that this trade turned out to be good because you're going to see this is a prime example of why trading with correct psychology matters so much, and also why it's so important to practice the correct risk management. So basically the previous trade to this one, where it was like a 3 point something risk to reward, my account was down to like 4% or 3% in drawdown. And basically, if I would have lost that trade, I believe I would have lost my $50,000 account. But you know, I took some days off, I recollected my emotions, my thoughts, and I took the trade and it turned out to be good. So that trade brought me back to break even on the account. And then the following trade that I took, which is the one I'm about to show you, put me into profit. So that just shows you how important it is to just be calm and collected and just let your edge play out in the long run. And at the same time, risking correctly. The reason why I got into drawdown in the first place is because my emotions took over. I was like, no, that didn't count, you know, and I just over leveraged, tried to make that money back. And I learned my lesson, you know, and it happens to everyone, even to the best of traders. You know, your emotions get to you every now and then. So you just need to, you know, step back a bit, recollect yourself and come back stronger. So that's exactly what happened. And now I'm ending the week with profit. So yeah, today's a Friday. I got taken out at a break even today. Nothing too special, just really choppy price action, consolidation. Once I got taken out at break even, I just decided to step away. So yeah, let's get right into this trade. I'm just gonna put my glasses on real quick. And this is as simple as trading gets, right? Once you understand this stuff, you could make money just by trading this simply, right? So the first thing I did is get on the markets at 9 a.m. New York time. I go on the daily time frame and I identify a few obvious things, right? So what I see is that we broke structure to the upside using the previous daily candlestick. So I'm like, all right, I'm already bullish. What else do I see? I see that there's a gap here that needs to be filled, marked in this blue line above. So I'm like, okay, so that is a potential take profit. We're bullish. Price action broke to the upside. Right, now let's scale down. So now we have a daily bias, right? Which is probably one of the most important things. Then what do I see? I see that the 4 hour is bullish. Yeah, the 4 hour is bullish. Sorry guys, it's been like, what, 2 days since this trade? Or it happened yesterday, but I traded today and it's just been a lot of things on my mind. So sometimes I just forget the reasons for trading it. But yeah, as I go along, I'll remember it. Anyway, the 4 hour is also in an uptrend. You can see there's been no breaks to the downside here. It's just a retracement, right? And what I would expect from a retracement is to at least go to like the equilibrium area. And also there's this massive gap that you know, aligns basically with hitting the equilibrium. So I'm like, okay, so it's bullish, but it's retracing down. You basically just have to react to the market the way the market presents its price action to you. So right now it's, you know, there's a target here, but there's also a target here for this to be filled. So I'm like, all right, cool. Overall, we're bullish because you need to keep in mind the high time frame. The daily time frame broke structure. Oh, sorry about that. Okay, so then I'm scaling down to the hourly, and what do I see? I see that the hourly time frame broke structures to the upside, and I'm like, all right, cool. This is pre-market open. So I mark out the 1 hour order block, which is the blue box right here. And then I scale it down again. I see that the 15-minute also has broken structure to the upside. So now I'm more bullish than bearish because it broke structure to the upside on a daily time frame as well. So just keep that in mind, guys. But also you have to keep in mind this area down here. So you literally just have to see how the market reacts and just follow different like lower time frame order flows, you know, like for example the 5 minute. So for example, over here it's 8:45. Let's have another candlestick. So I'd be on the markets around here, right? I'd get on at 9 in New York, and yeah, so what do I see? I see that this 1 hour order block, then I also see the 15-minute broke structure to the upside, and I see another confluence here, which is a little imbalance, right? A little 15-minute fair value gap. I also mark out the 15-minute equilibrium area the discounted and the premium area, right? Just the 15-minute area. Oh yeah, that's the wrong placement. Sorry about that. That's the new low there. And you can see I marked it out with the red line. So I'm expecting price to go here, show some sort of bullish momentum, take a trade, and basically because we're in a bullish order flow on the 4-hour, what I'd expect to happen is just take out the next structure point, right? Like that's the logical thing. But if it seems a bit too ambitious, you could look for other things. Like for example, there is a imbalance here on the 4-hour, or on the 1-hour, sorry. Let me just change that. So you could do maybe here, right? The top of that imbalance. But you can see the risk to reward ratio is a bit shit. So, you know, it really is up to your like risk appetite and how big you want your stop loss and stuff. But I was targeting the 4-hour structure point because that's what just seemed logical to me. Right, so here's what happens next. Market opens at 9:30. What's this? 9:30, yeah. So this is just the full structure of the full 15 minutes. But in those 15 minutes, if you scale down, what you could see happens. Let me just go to the 1 minute. In that 15-minute candlestick, you can see, there we go, 9:36. So that for me is good enough. That just tapped the 15-minute fair value gap, right? That is good enough. And all I'm waiting for now is a 1-minute break of structure to the upside. And that's why I get over here. So you get lower low, lower high, lower low, lower high, and boom. Structure is broken right here. It closed above the previous wick, right? It's not a break of structure if it just wicks above it. That's not a break of structure. It has to close above the previous wick. I get that. That's exactly where I enter. Stops go just below this 5-minute structure point, or a 15-minute structure point as well. Just seemed like a logical place. If it goes through those areas, then your overall bias is incorrect, you know? So I was like, that's a safe place to hit. And then yeah, basically moved to break even around here. And just took its sweet time, but took me to take profit. My original take profit, like I said, was the previous 4-hour structure point. But what you're gonna see now is why I took it out. So I was following the 5-minute order flow. I was like, right, if it breaks structure on the 5-minute to the downside, I'm gonna take it out. I already had my stops, obviously I break even. So over here, I'm still in the trade. I'm targeting here. This is my target. So what I told myself was, what's the time here? 10:55. So it's already a bit later than what I would like it to be. It's already later in the day. And I'm like, if it breaks the order flow to the downside on the 5-minute, I'm going to take it out and just end the day in a good amount of profit, you know? So what happened was it carried on, right? It carried on. I was still in the trade when it was up here. And I'm just following market, right? I'm just seeing when it breaks structure, when it doesn't. And I believe here is when I took it out. When it broke structure here. You could see it closed below that high. So it's low, 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 high, low, low, boom, closed it there. That's where I took my trade out. And a bit after that, it shot up. I mean, I guess it was like some sort of manipulation, and it's just, as you can see, carried on to my take profit. But it was already late in the day. I didn't want to risk it. I was happy with the amount that I had. You know, I didn't want to be too greedy. And for myself, seeing that price went to the exact location where my take profit was, and me being correct over other people in the market is what was very satisfying to me. You know, this was a great win for me. And yeah, like another thing that I didn't speak about is looking at NASDAQ. I'm always comparing S&P 500 to NASDAQ. Like I think most people do that, trade well. And what I saw on the Nasdaq, it's just like all this liquidity. Like for example, this double top here, right? The 4-hour structure as well. I think there was like a imbalance here or something. I can't remember too exactly, guys, but I was like, look, that is getting taken, you know? That is getting taken. And once I saw Nasdaq shoot up, right, and I think the S&P 500 was a bit of a lagging indicator as well, that also just reassured me to take the trade. And what I really expected to happen is this. So you get a lower low here, lower high, lower low, lower high, lower low. And then once I saw the daily break structure to the upside, I'm like, cool. I knew that this weekly structure point, this liquidity is going to get taken out. Aligned with the double top here, I'm like, bro, it's like free money, you know what I mean? And you can see what happens, boom, gets taken out. Exactly like I thought. I mean, I had this weekly liquidity thing marked out since before this trade was taken out. And obviously this is the following day that it gets taken out. Actually, no, it got taken out yesterday, wow. But just about, but I think it was like really late in the day. Anyway, I know it's a bit much to take in, as simple as it was. In simple terms, break of structure to the upside, retracement into the confluence, so 15-minute imbalance / fair value gap, as well as the 1-hour order block, 15-minute break of structure to the upside, targeting previous structure points, targeting previous liquidity, targeting previous imbalances. And that's exactly what happened there. And, I ended my week with a good amount of profit on my account from starting the week with almost losing the account. So yeah, hope you guys enjoyed this video. Make sure to put your questions down below if you have any questions. And yeah, that's pretty much it for this video. Hope you guys learned something, and if you have any questions, make sure to comment down below. And yeah, I'll see you guys in the next video.